Hello friends, that if you are 60 years old or older, and you have been receiving Social Security benefits, or if you are someone who worked in public service for any part of your career, there is money that may be owed to you right now that the Social Security Administration has not called you about, has not mailed you a letter about, and will not automatically send you until you take one specific action. Today I am going through 3 separate payments that are available to eligible seniors right now in July 2026, who qualifies for each one, exactly how much is involved, and the specific action required to claim what you are owed before the window closes. Before we get into it, subscribe to this channel right now and turn on the bell. Changes like these arrive without personal letters and without reminders. The people subscribed here find out while there is still time to act. Subscribe now and let's get into it. Payment 1. The Social Security Fairness Act retroactive payment. And this one is the most significant single payment most affected seniors have ever received from Social Security in a lump sum. On January 5, 2025, President Biden signed the Social Security Fairness Act into law. This law permanently eliminated 2 provisions, the windfall elimination provision and the government pension offset, that had been silently cutting the Social Security benefits of millions of public sector workers for decades. The people affected by this law include teachers, firefighters, police officers, postal workers, state and local government employees, and anyone who worked a job covered by a pension that did not pay into Social Security, and who also worked other jobs that did pay into Social Security. Under the old WEP rule, their Social Security retirement benefit was reduced, sometimes by as much as $587 per month. Under the old GPO rule, their spousal or survivor benefit was reduced, sometimes eliminated entirely. Both of those reductions are now gone, and SSA was required to recalculate every affected recipient's benefit going back to January 2024 and send them a retroactive lump sum payment covering the difference between what they received and what they should have received. By July 2025, SSA had sent out approximately 3.1 million retroactive payments totaling $17 billion. The average retroactive lump sum payment was approximately $6,610 per person, but here is what most people do not know. Not everyone received the full amount they were owed. Some recipients received only partial adjustments. Some surviving spouses and divorced spouses were missed entirely in the initial processing wave, and SSA is still processing corrections and updates as of July 2026. If you worked in public service, or if you are a surviving or divorced spouse of someone who did, and you have not contacted SSA specifically about your Fairness Act adjustment, you may be owed money that has not arrived yet. The action step for payment 1 is this. Call SSA at 1-800-772-1213 and ask specifically these words. I want to know if my benefit has been updated under the Social Security Fairness Act and whether I am owed any retroactive payment. Use those exact words. That if SSA tells you your benefit was already updated, ask them to confirm the specific dollar amount of both your ongoing monthly increase and your retroactive lump sum. Write those numbers down. If either number seems incorrect, or if they cannot find an update on your file, ask for a supervisor. Payment 2. The $6,000 senior tax deduction, and this one works differently from a direct payment, but the financial impact for many seniors is just as significant as receiving a check. On July 4, 2025, President Trump signed the One Big Beautiful Bill into law. Inside that bill was a new additional tax deduction of $6,000 per person, specifically for Americans who are 65 years old or older, available for tax years 2025 through 2028. This is not a tax credit. It is a deduction, which means it reduces the amount of your income that gets taxed. For a married couple where both spouses are 65 or older, that is $12,000 in additional deductions per year. Here is who qualifies for the full $6,000 deduction. Single. Filers who are 65 or older. With modified adjusted gross income. Up to $75,000 per year. Married couples filing. Jointly, at least one spouse must be 65 or older with combined income up to $150,000 per year. The deduction phases out for higher incomes and disappears completely. For single filers above $175,000 and for married couples above $250,000. But for the majority of seniors on Social Security, the full $6,000 is available. Now here is the part most people do not realize. This deduction directly reduces how much of your Social Security benefit is subject to federal income tax because it lowers your adjusted gross income, which lowers your combined income, which is the number the IRS uses to decide how much of your Social Security is taxable. For a senior in the 50% Social Security tax zone, a $6,000 deduction that moves their combined income below the $32,000 married threshold can save them more than $1,000 per year in federal taxes on top of any other benefit from the deduction itself. The action step for payment 2 is to confirm that the $6,000 deduction is being applied on your 2025 federal tax return, the one you filed in 2026. If you already filed and it was not claimed, you can file an amended return using Form 1040X. The window to amend is 3 years from the original filing deadline, so you have time. But act now while the issue is fresh. Payment 3. The retroactive earnings record correction payment. And this one is the least talked about but directly affects seniors whose SSA benefit was calculated using an incorrect earnings record. Your Social Security benefit is calculated using your earnings record, a record of every year of wages or self-employment income you paid Social Security taxes on throughout your working life. SSA maintains this record and uses it to calculate your primary insurance amount, the base number that determines your monthly benefit. The problem is that SSA's earnings records contain errors more often than most people know. Self-employment income reported incorrectly, wages from a job that were never matched to your Social Security number, years where an employer reported your earnings under a wrong number, a name change that caused records to be filed separately. Each error directly reduces your monthly benefit because if a year of your earnings is missing from your record, SSA uses a 0 for that year in the formula. A single missing year of wages at $60,000 can reduce your monthly benefit by as much as $150 per month permanently. The Social Security Administration allows you to review your full earnings record at any time, and if you find an error, you can submit a correction with supporting documentation. If the correction is accepted, SSA recalculates your benefit, and if you were underpaid, sends you a retroactive lump sum payment covering the months you received the wrong amount. In 2026, with SSA still working through the backlog created by the Social Security Fairness Act, updates, earnings record corrections are taking longer to process than normal, but they are being processed. And for seniors who discover a missing year worth thousands of dollars in wages, the retroactive payment can be substantial. The action step for payment 3 is to log into ssa.gov/myaccount right now and look at your Social Security statement. Click on Earnings Record. Review every year from when you first started working. Look for any year where wages appear missing, appear too low compared to what you remember earning, or appear as 0 for a year you know you worked. So here is the complete picture of the 3 payments available to eligible seniors in July 2026. Payment 1, the Social Security Fairness Act retroactive lump sum. If you or your spouse ever worked in public service, teaching, firefighting, police work, government, call SSA at 1-800-772-1213 and ask specifically whether your benefit has been updated under the Social Security Fairness Act and whether you are owed retroactive payment. The average retroactive payment was $6,610. If you have not confirmed your update, You may not have received the correct amount. Payment 2. The $6,000 senior tax deduction. If you are 65 or older with income below the phase-out threshold, confirm this deduction was applied on your 2025 federal return. If it was missed, file Form 1040X to amend. For a married couple, where both spouses qualify, that is $12,000 in additional deductions, which can save over $1,000 per year in taxes and reduce how much of your Social Security is taxable. Payment 3. The earnings record correction retroactive payment. Log into ssa.gov/myaccount this week. Review your full earnings record year by year. If any year shows a zero or an amount lower than you actually earned, gather your W-2s or tax returns from that year and call SSA to submit a correction. A single corrected year can increase your monthly benefit and generate a retroactive payment covering every month you were underpaid. None of these 3 payments will arrive automatically without action. SSA will not call you. SSA will not send a personal letter explaining that you may be owed money. The payments exist. The eligibility exists. But the trigger in every case is you making one phone call, logging into one account, or submitting one form. Subscribe. Share this with every senior you know, especially anyone who worked in public service, anyone who is 65 or older and has not reviewed their tax return for the $6,000 deduction, and anyone who has not looked at their earnings record on ssa.gov in the last 5 years. And I will see you in the next one.